Now I want to shift over to some projections for 2024. So we now have full data for 2023, and Zillow just came out with their forecast for what they expect 2024 home prices to do. And their expectation is home prices will increase by 3.5%. So, that's a pretty good investment for the place you live, just going up another 4% in value. And they also have this map, and if you're on watching this on YouTube, you'll see that this map it's like a heat map that shows the areas that they expect to have 7% or more growth, areas that are flat, and areas that are negative. And Arizona is solidly in the blue, uh, for showing 0 to 7% growth,
Wow.
0 to 7% appreciation in pricing. And then as you follow that across the United States, you can see, there are some areas that even next door to each other have a decline, right next to an increase. So as we talk about a lot, real estate is local, so we know that. But overall, the trend looks like it's going to be positive, prices moving up, even with high interest rates that we have.
When I hear that, all I can think is we need more apartments. There has to be more multifamily.
Yeah, why do you think that?
Well, if home prices are going up, it does make it more difficult for uh, people to buy a home, and then just multifamily becomes much more of a necessity.
Yep. An additional article. This is a local article, Phoenix Business Journal. Home prices headed back up in Metro Phoenix. In the end of last year, home prices in the Phoenix market dipped down a little bit, by about 2%, and already we're starting to see that with the January sales numbers, home prices are continuing to move up. Just a couple of data points. Home prices increased in the Phoenix area in 2023, 2.5%. So they've continued to move up. And so far this year, and we're only looking at 1 month, it looks like home prices continue to climb. One quote is from Greg Haig of 72 Sold. He says a sudden surge in pent up home buyer demand has caused the Phoenix housing market to rebound robustly since the first of the year. So that tends to happen a lot over the holidays. People don't really want to move in Thanksgiving and December holidays, and then the first of the year. Now all of a sudden they're ready to move. So home prices continue to move up, and now as we shift and look at how that impacts the multifamily rental market, we have new data from Globe Street that talks about where the highest demand is for apartment units. And the number one is Phoenix has the strongest demand for new apartment units. They looked at the 12 primary markets in the fourth quarter, and they're quoting from RealPage. Most of these markets were in the Sun Belt, but number one was Phoenix, also performing well. Houston, Atlanta, Minneapolis, Newark, which were a little bit of a surprise, and then they're back to the south: Raleigh, Durham, Orlando, Austin, Charlotte, and also Salt Lake City. So these are the areas that they're seeing the highest demand for apartments, and that's definitely correlated to the cost to buy a home.
Yeah, and especially in Phoenix, we just see so much job growth and migration growth too here. So it makes sense as to why there's a surge in department demand and supply here.
So with that said, now we're looking at what are we expecting the cost of rent to be in the Phoenix market? And this is a big question if you're an investor in our REIT. You saw that our value of our shares were flat last year. That's because rents were basically flat, values were basically flat. But as we look at 2024, and certainly in the future years, we expect rents to really move up as the supply of new apartment units comes down in 25 and 26. But in 24, there's still a lot of apartments getting finished coming on the market. So, an additional report about where we expect rent to growth will be in 2024 from Globe Street. They're quoting a source, Yardi Matrix, and it's really kind of mixed as to what we're expecting rent growth to be this year. The average nationally last year in 2023, rent growth was up 1.6%. So if you're an investor in apartment buildings, that basically meant you're now making about 2% on your asset last year of an increase.